In this ongoing series, we will be building a diversified total return TFSA all the way from 0 to 100K. Hold on to your portfolio, folks. This is going to be a good one. We began last summer with that first $500 deposit to start a brand new TFSA. We will be adding another $500 this month for a total of $2,500 invested thus far in this new TFSA. With every month, we get one step closer to moving that dial from 0 to, well, of course, 100K. November turned out to be a better month on the market, and we saw more green days than we have seen in the last few months. Of course, those red days sure are great for getting some discounts. We may very well be in a technical recession, but instead of dwelling how that is going to turn out, I want to look forward to this coming month and what we may expect to see in December. This is a month that may be more predictable thanks to the duo known as tax loss harvesting and the good old Santa Claus Rally that often follows. If this month follows that pattern, we should see some red in the market for the second 2 weeks of December, and then with the arrival of Santa, a green wave to ride out the last week of the year and deposit us a few days into the new year. As investors, that means we may get a few pre-Christmas sales thanks to the selling pressures of tax loss harvesting. The middle of December is more times than not a good time to buy. Join the conversation. Let us know in the comments if you think we're getting a Santa Claus rally this year. Your participation is, of course, well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a huge thank you for that click. As this series progresses, we will be adding new statistics and beefing up the ones we already have. This is going to be simply awesome. I do need to add that initially we did start this challenge with $400 per month, but for the math it made sense to go with $500, so I topped the previous months up, and the buys this month include that extra $100 per month. We will of course start by looking at our current lineup and any changes that have been made to them. We will start with Alimentation Couche-Tard, and this month around we did buy one more share to bring our total up to 3 shares. They have an average cost base of $75.86. We've got no dividends yet to show, so our return on investment and total return, same number, negative 0.21%. And their yield, of course, that comes in at 0.711%. And we're going to see the first dividends from these guys around the end of December. This is a stock that I do have some pretty big expectations for. Next, we have, well, it's Scotiabank, and this time around I did buy 2 more shares to bring our total up to 6 shares. Our average cost base has drifted down a bit to $61.92. We have received $3.18 in dividends from Scotiabank, so our return on investment, that comes in at negative 5.47%, and the total return after we factor in those dividends comes in at negative 4.62%. Their yield looking pretty darn nice at 7.365%, and we are expecting our next dividends from BNS at the end of January. This is a great yield, and it will come down when the banks begin to move into recovery, which of course is going to happen eventually. Our next stock is Brookfield Asset Management. We did not add to our position this time around, so we're still at 5 shares. That average cost base still sitting at $45.74, and we have received so far 87 cents in dividends, so our return on investment back in the positive, 4.15%, total return 4.54%. They have a yield of 3.755%. We are expecting some dividends from them at the end of December. Brookfield really clawed themselves back into the green this month. They are, in my opinion, looking pretty darn good. Moving to CNR, we did add another share, taking our position up to 2 shares. Their average cost base coming in at $151.74. We've received 79 cents in dividends thus far, so their return on investment, 1.41%, that total return, 1.67%. Yield-wise, their yield is sitting at 2.062%, and we've got dividends coming out on December 28th. CNR was another position that did move back into the green. I guess you can say their track moved into greener pastures. Up next, we added 11 shares to Canoe EIT for a total of 21 shares. We've got an average cost base of $12.88. We did receive an additional $1 in dividends this month, so our total dividends are up to $2 on these guys. Their return on investment comes in at negative 1.55%. Total return after we factor in the dividends, negative 0.81%. Their yield still fantastic up there at 9.486%. And this is one of our monthly dividends, so you gotta love that. Their next dividends coming out, well, December 15th. Up next, we did not add to our Canadian Natural Resources position. CNQ still sits at 2 shares. Their average cost base is $81.95, and we have received so far $1.80 in dividends from CNQ. Their return on investment, 9.14%. Total return, 10.42%. That's looking pretty good. Their yield comes in at 4.508%, and the next dividends for these guys are coming out January 5th. They keep on getting better and better and are a huge contender for that GOAT title. Did they do it though? We will find out. The next stock is Decisive Dividend Corporation. We did not add any more shares this time around, so we're still sitting at 16. Their average cost base, $8.48. This month around, we did get another 64 cents in dividends, so our dividend total on this one is up to $1.72. Their return on investment, negative 8.14%. Factoring in the dividends, we get a total return of negative 6.87%. They really did improve in November, but was this enough to get them out of that toad position? Their yield, still looking good, 6.178%. It's another one of my monthly dividend payers. Next dividends come out on December 15th. Fortis is up next, and we are still sitting steady at 2 shares. Their average cost base, still $55.17. We've yet to receive any dividends from Fortis, but trust me, that's about to change. Their return on investment and their total return the same, negative 0.80%. Their yield sitting at 4.273%. Their dividends are dropping on December 1st, and of course, keep in mind it usually takes an extra day to see them in your broker, so most people are going to see those on the 2nd. You gotta love a dividend king. That's all I'm going to say about Fortis. The next stock is Hammond Manufacturing, and we did add one more share this time around, which takes us up to 15 shares in total. Our average cost base sitting at $7.60. We have received 18 cents in dividends from them, so their return on investment 6.05%, and total return comes in at 6.21%. Their yield is 0.725%, and it's a semi-annual, so twice a year. The next time we expect dividends from these guys is around the end of February. Hammond did stumble a wee bit in November, and I can tell you, well, gosh, I didn't think this would happen, but it did. They've been dethroned as our GOAT. Up next, we did not add any more shares to our open text position, so they sit tight at 2 shares. That average cost base, still $47.03, no dividends yet, so their return on investment and their total return, same number, 19.43%. Holy banana bread, that's fantastic. Their yield comes in at 2.526%. It is a quarterly dividend. Their next dibs are actually coming out this month, so December 20th. Wow, what a month they had for sure. We added 2 more shares to Sir Royalty for a total of 10 shares. They have an average cost base of $16.40. Their dividends come in at $1.90, so we did get another 76 cents this month in dividends. Their return on investment, negative 0.61%, but that total return factoring in the dividends pushes us up into the green at 0.55%. Their yield is sitting at 6.994%. They're another monthly dividend payer, and we are expecting dividends, well, right at the end of this month. So they're probably dropping the same day this video drops. So those are the stocks that were already in our new TFSA. As usual, we did add 2 spanking brand new positions. The first of the new stocks is Alvo Petro, and we opened a position with, well, 20 shares. Their average cost base coming in at $8.09. We don't have any dividends or any kind of returns yet, but let's look at their yield. Their yield does come in at 10.396%. That's pretty cool. It is a quarterly dividend, and the next divs are, well, mid-January, so we'll get to see some dividend data pretty darn soon on this one. This is a great total return addition that also doubles as a great passive income play. You gotta love a twofer. I also opened a position in Stella Jones with an addition of 2 shares to start us off. So our initial average cost base comes in at $83.37. No data, of course, yet, so we'll jump right over to their yield, 1.178%. Once again, another quarterly dividend. Their next set of dividends come out December 21st. This is simply another stock that may be a really nice addition to this portfolio. But let's take a quick look at all of them together so we can see that portfolio continuing to take shape. You will notice that for the 2,500 currently invested, the portfolio currently has a market value of $2,512.69, which is good to see that we are overall back in the green. Let's take a quick look at the portfolio's diversification using the Blossom Social app. We can get a really nice looking diversification breakdown. I like to limit each sector to a maximum of 20%. So we still have 2 sectors a wee bit on the heavy side, which are financials at 27.6% and industrials at 25%. 25.3%. Both have drifted downwards since last month, so we have them moving in the right direction. Energy grew as we expected, up to 15.8%. We also have consumer cyclical at 10.6%. Materials jumped up big time to 8.2%. Technology at 4.7%. And utilities dropped down a wee bit to 4.6%. Healthcare came in at 1.9%. Consumer staples 0.9%. Communications 0.2%. And real estate bringing up the rear at 0.1%. Next month's selections will absolutely be taking these numbers into consideration. Now on the graphic, that second number in orange is the average across all Blossom users, so you can see how far off I am from some of those averages. It is time to look at the toad and the goat of the portfolio for the last month. The toad award was not as close as I think we may have suspected. Decisive Dividend took the toad award again, even though they improved quite a bit in the month. Even with Scotiabank's less than stellar earnings call, it was just not enough to take the warts from DE. And now for the one we love, the goat. And this month we have a brand new goat. OpenText simply had an awesome November, and Hammond, well, they did not. They rose to the occasion, and now we may have a three-way battle in December between OpenText, Canadian Natural Resources, and Hammond, who wants that title back. I can't wait to see what happens. So this is our update for this month. We will be back here again next month to do it all over again. I sure am looking forward to buying that next batch. As usual, if you are interested in any of the stocks in this challenge, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Keep the learning going. Watch my video on fundamental analysis or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.